Hello everyone. Good morning to you from here, and depending on what time zone you're tuning in from, I wish you good afternoon and good evening. Welcome to today's Forex Money Mastery as we prepare for the final trading day of the week. It's been quite a week. A Fed rate cut that didn't shake the dollar, market testing key levels, and plenty of emotions flying around the charts. Now, today's session is going to be special, not just because it's Friday, but it's also the last trading day of the month. That means two things. Traders are expected to start taking profits and markets can behave unpredictably as big players rebalance their position. So, psychology plays a big role today. Patience, awareness, and emotional balance will separate those who close the week strong from those who get caught chasing the noise. In this session, we are going to look at what the charts are telling us right now, how the dollar's resilience fits into the bigger story, and how to position smartly as we wrap up the week and, of course, the month. So, if you're joining me for the first time, well, my own name is Sheriff Daramola. You're highly welcome on board. Um, you're in good hands and stick around, stay focused, and let's build clarity together. So, with that being said, here we will be diving right into the business. And as always, the first thing we want to be doing is to understand what is going on in the US dollar market dynamic. Now, what you see on my chart right now is the DXY, that is the US dollar index. And for those of you who don't know, this is the instrument that gives us an overview of the performance of the US dollar within a specific period of time. And since the beginning of this week, we have been using this ascendant trend line to navigate this market. And you know how we use our trend lines, of course. As long as price remains above them, we continue to look out for patterns and structures that support buying ideas, right? Now, zooming into the structure, this was where we were at the beginning of the week. We were able to capture a range bound structure right here, where price during the second half of last week we saw a consolidation showing that price action was confined within the $98.15 level and the $98.85 area. And of course, this gave us an insight into the prevailing uncertainty in the market at that point in time. And I went on to buttress that this could be attributed to the expectations of the Fed interest rate decision this week, as major key players might have stepped aside from the market, waiting for the decisions to be made before making aggressive bets. Now, to help us navigate the structure, we decided that we will be looking for signals in the form of either price breaking out the resistance line to give us an opportunity to buy, showing that dollar is getting stronger, or a breakdown of the structure to incite selling pressure. But I went on to emphasize that even though we have a breakdown of the structure, the fact that price is still sitting above the ascending trend line will not really make us jump into a sell right away. And the fact that this area will serve as a bus stop, and as you will see, immediately price came back into the trend line. We saw price climb all the way up, respecting that trend line at the same time. So for me, the US dollar has repeatedly bounced off higher lows. The trend line has acted as a springboard for these assets, as you will see every time sellers step in, buyers press harder from that particular trend line. So even when the Fed rate cut happened, that technical momentum gave the dollar a push upward. Now, one question that should be in every single trader's mind right now is, despite the fact that the Fed cut interest rates, why is it that the dollar still kept strong? Because when interest rate is cut, we expect that the currency asset for that economy should drop due to uh, loss of interest from investors, right? Well, there are a couple of factors here that had influenced that momentum. Well, from a long-term perspective, the U.S. Treasury bond yield has been doing very well, and, um, and this was attributed to investors worried about inflation might still continue to hang on. So, despite the Fed trimming by 25 basis point cuts, the yield curve, um, especially in the U.S. Treasuries, is still rewarding USD holders. Now, that makes holding the US dollar more attractive than it might seem from just the headline rate move. And we all know how critical the US Treasury bond yield is to the US dollar. Every time the US Treasury bond yield drops, the dollar drops. When it rises, the dollar also rises, right? Then, besides that, during the press conference on Wednesday, immediately after the rate cut, Powell, that is the Fed chairman, emphasized that the December rate cut, which everyone is looking forward to as another cut is going to happen, he went on to say that it is not cast in stone yet. That though they cut it now, doesn't mean that they should be counted on to keep cutting interest rate faster. Now, that caution there give the dollar room to hold strength rather than collapse. So, with messy geopolitics in the air, trade fears, and of course the U.S. shutdown creating economic blind spots, investors tend to prefer hard currencies and liquidity over chasing yield elsewhere. So the risk of the uncertainty, of course, has been helping the US dollar to stay strong. And another thing that there are also positive light we can look into the Fed rate cut is that it could boost economic activities. Now that to fund credit facility now has become cheaper, we will see business thriving because business owners are now willing to borrow money from the bank, do more business, expand their business, and of course, um, um, employ more people as well, which definitely could make the economy thrive. So for me, the dollar still has the potential of keeping this uptrend at least in the meantime. Now, with the situation we have here, looking at the technical structure, we can see that price is back into a critical structure. This resistance line here at the $98.56 level. Now, remember at the beginning of this month, we saw how that same level was a strong resistance for buyers. As we saw, every time buyers come in, it negated the bullish attempt. The same thing happened here. And in the last 24 hours, we can see price is back into the structure. But as soon as price got in here, we can see market is going through a choppy scenario as buyers are trying to break through, sellers are limiting the uptrend, and this has continued for the past 24 hours. Now, the question going into the final trading day of the month is whether this area will remain um, a resistant line pushing price down, or we will see a successful breakout retest of the structure to continue the uptrend that started about a month ago. This area will be. So, what are the chances that this will happen? Well, um, in the coming weeks, because of the government shutdown and the fact that Powell admitted that they are flying partly blind and will lean hard on whatever private patchy data they get. And so every inflation print, job numbers, or spending report will be amplified. So with that, I still think that the dollar still has a room. For instance, inflation is still above 2% in the United States. The Fed may likely be hesitating to cut interest rate further, which obviously can strengthen the US dollar. And if inflation cools, the market will lean into cuts and US dollar may give back some ground. So for me, the trend line here still continue to play a significant role in determining how price will be playing out. You know how we use our trend lines. As long as price remains above them, we want to maintain a bullish bias. Though we could still see price do retracements. Of course, retracement will happen. We could see a pullback back into structure where price could find buy pressure there. And remember, we also have this descending trend line, which could be a platform for retest of structure. As we saw, price broke out the structure during the week, could come back, retest structure in an attempt to continue the uptrend move. So technical structures here gives us an insight into how the market is digesting the fundamentals. And with Powell's resisting to commit, traders will be on the edge, of course, and each speech, each Fed official member's comment, in fact, each trade data point might swing sentiment. So the USD part will be determined by tone and surprises, not just fundamentals alone. And of course, whatever happens on the chart here will be giving us an idea of what is likely going to happen. So if you would ask me, I think the dollar still has a room to climb, and the choppy scenario we've seen around the resistance line here could actually evolve into an uptrend continuation pattern. It could turn out to be a flat pattern, a pennant, a bullish rectangle where the breakout of structure will welcome buying ideas. Now, if this maybe surprisingly transitions into a reversal setup like a double top, double head and shoulder pattern, we could see price retrace back into the trend line to inside an uptrend, a bearish move into the trend line. Okay, so with this information we have gathered here, let's scale into um, the assets I'm monitoring for this week. Remember, we have been monitoring the USOIL, the USDJPY, the GBPUSD, and of course the gold commodity. So we want to see how the market is, how the US dollar has rippled into this respective market. Now, to start with, I'm looking at the US crude oil spot, right? We have the US oil spot here. And since the beginning of the week in this market, we've seen the price of the US crude oil drop. Um, it has been finding lower lows and lower highs since the beginning of the week. And one thing I will say here is that oil prices is struggling because there is too much supply in the market. In fact, several OPEC Plus members plan to increase output in December. And while the US is already producing record amounts of record amount of crude oil, this oversupply we see here appears to outweigh concerns about US sanctions on Russian producers. Now, traders are going to be watching to see if OPEC will take action to balance the market in their next meeting. Now, From the technical structure we have here, though the market has been on a very strong downtrend in recent times, but one thing I noticed this week is that despite the strong bearish move to the downside, we can see that this area around the $59.50 level had become a barrier for sellers. So you can see every attempt by sellers to break through. What did we see? Sharp rejection happened there. In fact, we have multiple um, hammer candles, which theoretical tells us that buyers are still present in the market. And of course, we saw an engulfing bullish candle happen here yesterday. So for me, it appears we are seeing a support line that could push price to do a recovery, maybe back into structure before the downtrend continues, or we could see a breakout of the trend line. So to help me navigate this market this week, today, I have a structure on the 15 minutes time frame, which is not really doing very well at the moment because I triggered a buy, and this is the structure I saw here, and I think I'll just have to sell here based on what I'm seeing. So I just placed a sell, and hold on a second, I'll explain to you why I have done so. Okay, so if we look at what has been going on here since the beginning of the week, the market has been on a downtrend, right? And on Wednesday, I shared with us a structure here where price was confined within a range, right? And one thing I noticed now after buying, I actually bought above the $60 level here. Now, one thing I noticed now is that when price got into the resistance line of that range at the $60.30 level, we saw continued rejection of this area. And if you look closely into the character of those candles, we can see that we have some shooting star candle around that point, which um, projects that sellers are present, right? Now, with that scenario here, I don't want to be considering buying again within this whole area, though I will allow the buy position to play itself out. Sincerely, if I had been monitoring the USOIL charts in the last 15 to 30 minutes now, and I noticed this one, I would have moved my stop loss to break even. But my bad, price has already moved far away from that area, so I will just allow the current buy positions to run. So I'll take out this buy indication here. We no longer buy here anymore. So to buy now, to consider buying the US oil, I would rather want to see price break out, retest the $60.30 level for confirmation's sake before I jump into another buy. So let's allow this one to run. Now, going into today's session and considering the fact that sellers are beginning to gain momentum, and like I did say earlier, the markets will definitely be leaning towards the fact that there's too much supply in the market and that OPEC members are also planning to increase output in December. And if that suffices, definitely we will be seeing price continue to drop. So selling below the $59.85 level is looking promising. 59.85 level. I'll just place it right there. Okay, so if price breaks down, reaches the $59.85 level, we're looking to sell, and then we're looking to add more if price drops below the $59.60 level, right? In fact, a drop below this area will, I'm going to be placing a sell stop order here. This $59.60 level was that support line we identified on the 4 hours time frame. So I'll place a sell stop order below the structure, and then I will have my stop loss right above the $59.85 level. And here we go. So let's see how the market is going to play out on this one. So the only condition that will make us buy is to see price breakout, retest the $60.30 level before we jump into an uptrend scenario. So that is it I have here on the US crude oil. I do hope I made myself clear. If you have any questions, feel free to let me know in the comment section. So I'll take 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on my watch list. Stay tuned in. I see you, Wokocha Kingdom. Good morning. Glad to have you here. Trust you're doing very well. Okay, so in the absence of no further questions, let's move on to the next asset I'm looking at for this week. Stay tuned in. So the next asset we are looking at is the GBPUSD. That is the British pounds against the US dollar, right? And of course, since the beginning of the week, the dollar has been dropped. Sorry, the pound sterling has been dropping significantly. Um, um, okay, let me share with you the structure. So at the beginning of the week, this was the structure we were looking at. We saw price breakout of the resistant line of the structure at the 1.33355. We were lucky enough to capture that move stop loss to break even. We were taken out of that position as sellers came into the market, and since then, price has been dropping all the way to the downside, as you will see here. Now, since yesterday, we've been seeing signs that the pounds is getting recovery as traders expect another interest rate cut from the Fed in December, right? That is the expectation in the market, but Powell is trying to persuade against this orientation. However, um, that itself for me could um, see the dollar continue to rise for me. If we look at the mixed Fed comments, uncertainty around the UK's November budget, which are keeping the pound sterling under pressure. And of course, UK's inflation is also easing at the moment. And there is also the expectation that the Bank of England will also cut, do rate cuts, and talk of possible tax increase and slower productivity growth is also weighing on confidence in the British economy. So I'm not really buying the idea around this support line we see here. For me, I still think that that support line has a strong tendency of getting broken to the downside. So here I have a structure that will be helping me navigate the market today. So I was able to capture the indecision going on in the market, and this is coming reflecting on the chart as a range bound structure. As we see here, price is confined within the 1.31575 and the 1.31255. Okay, now one thing I've noticed here, I had a sell yesterday. Unfortunately, I entered with a very small lot size. So what I'm going to do on existing sell position, I'll advise you to do so as well. If you still have a sell position running, move your stop loss and secure this position as we monitor price action around this area. Will this area become a support line? Really? Look at what happened here this morning. Will it really be a support line? Well, time will tell. Now, the only way we can know that support line has come to stay is if price can break out both the trend line and that resistant line to the upside. And in fact, I'm not going to be jumping in buy right away. I will wait for confirmations to happen, like a retest of that structure before I jump into a buy. Now, because the market is strongly bearish, I'm going to be placing a sell stop order below the support line of this range. Okay, so I'm suspecting if price can break down that support line, we may be seeing a massive downtrend ahead of next month's, the beginning of next month's trading session. So I already placed a sell stop order below the structure. Let's see how this is going to play out. Remember what I said, I'm only buying if price breaks out, retest the structure, and if it just goes on like that without retesting, I would rather leave that trade to go on. Okay, so that is what I'm looking at on the GBPUSD. I hope I made myself clear. If you need some clarity or you need some confirmations, feel free to let me know in the comment section. So I'll take another break and I will be right back in a moment. Stay tuned. All right. So let's move on to the next instruments on my watch list. So the next instrument we are looking at is the USDJPY. Now, this is an interesting one, really. The yen has, though the week started with a strong note for the yen, but at the moment the yen is has lost, in fact, the profit it accrued at the beginning of the week as the US dollar stays strong after the Fed signal it may pause for that rate cut. Although Tokyo inflation numbers, let's see what happened. Tokyo inflation numbers suggested that Japan might raise rates soon because we saw a 2.8% higher than the previous month. And this can likely incite the idea of interest rates hike in Japan. Um, However, investors still believe that the Bank of Japan will stay cautious due to the new Prime Minister's focus on economic stimulus. Now, that belief for me keeps the yen under serious pressure. Now, though the easing US-China trade tension have also reduced demand for the safe haven assets. Now, with the way things are, so this was our structure at the beginning of the week. We had this range. Remember, we sold the USDJPY at the beginning of the week. I told you I missed out on it anyways. I don't trade on Tuesday. This bearish move started on Tuesday. Now, on Wednesday, we were able to mark out a structure on the 15 minutes time frame right here. Hold on a second. I think I still have it. I think I still have it. Let's see. Okay, yes. It's right here. Okay. So this was the structure we were looking to help us navigate the market at the beginning, sorry, on Wednesday's trading session. And I was saying that we want to be buying the breakout retest of this key level at the 152.5 and looking to sell the breakdown of the 152. Now, the sell position actually got triggered at the 152 right here, but it didn't do well. We saw price move about 25 pips, and then it came back into entry point, taking us out of that position in a loss. It took me out in a loss anyways. For those of you who probably had moved your stop losses to secure position, well done and kudos to you. Now, later on Wednesday, we saw price break out the structure, and yesterday we saw price rise again. And I don't trade on Thursdays. Unfortunately, I missed out on this bullish move. Now, going into today's session, I noticed that the momentum still looking promising after capturing this trend line, connecting the pivot lows we have here. Now, another structure we cannot ignore is this descending trend line here, which got broken this morning. As you will see, we have price break out of the structure this morning, and there is a high chance that price could come back, retest the structure in an attempt to continue the uptrend move. Now, for those of us who had missed out on this bullish move, we'll need to focus on what goes on around here. So personally, if you look at the bottom of your screen, you'll see I already have a buy position on the USD JPY, and though it's currently running in a loss, and as you will see, price has been confined within a structure here. Now the question now is, will price retrace back into the structure before the second leg of the bullish momentum will happen, or are we going to see price break out of this resistant line to welcome buying ideas? So for me, I already bought, and I'll be looking to add more buy position if price breaks out of this resistant line. So I will place a buy stop order there. Hopefully it breaks it out and retests it, and then confirms that the uptrend is intact. Okay. But if that is not the case and selling pressure persists here, I will wait for price around this juncture where I will be looking out for reversal setups to continue the uptrend move, and I doubt if that is likely going to happen today. So if you're a short-term trader, if you're looking to capture small moves, we have something here between the 154.200 and that 153.9. That's about 30 pips. So selling the breakdown retest of the structure is good. But me, being a long-term trader, I'm not looking to sell here. I'm only looking to buy because the overall sentiment here is bullish based on the fundamentals we just talked about. So let's see how the market will play out from this particular point. Okay, so I'm leaning towards a bullish bias. It's either I add more buy at the break of the 154.350 or look to buy the retest of this trend line. So let's see how the market will evolve. And if you're a short-term trader, you can be looking to sell the breakdown retest right into this confluence we have here. So, if you have questions, let me know in the comments. I want to take a sip and I will be right back. So, all right, traders, I guess it's a wrap today. Remember, it's the last trading day of the month, so protect your capital. Stay aware of your emotions and don't force trades just because you want to end the week with a win. Okay. The goal is to finish steady. All right, not flashy, of course. And I will be sharing my weekend outlook and trade ideas for the assets I'm watching next week. So make sure you subscribe and turn on notifications. And for my premium members, don't forget our Forex market prep is happening on Sunday. Bring the pairs or assets you plan to trade next week and let's dissect them together. Let's find clean entries, exit zones, and build a grounded plan before the new week, the new month began. So I want to wish us all the best of luck on the for the remainder part of the week. Um, Always remember, every decision we make is more or less an educated guess until price hit your TP target. So ensure you have a well-defined risk management strategy in place. So it's on this note I want to wish us all the best of luck. Trade smart, trade consciously, and do have a restful and balanced weekend ahead. And happy new month in advance to you all. Do have a wonderful evening, everyone. Bye. Bye.